Well, Think 3 this morning. Last week we brought you Yahoo Finance's Company of the Year, and of course that honor went to Costco. Today we are unveiling the worst company of the year. Here to discuss this, Yahoo Finance's senior columnist Rick Newman. Like, you have a drum roll for the best company.
I don't do best. I only do worst.
It's a cringe to bring it in.
It fits you well, Rick. It fits you well. You wear it well.
So what is it?
So everybody's dying to know. We've been talking a lot about this company lately. It is Carvana, the online used car buying site. And it's quite a simple story. Now, to get to our worst company of the year, we go straight to you, the Yahoo Finance audience. We do a poll. We got more than 5,000 responses. And Carvana actually did not get the most responses. The number one worst company that our audience told us was Meta, Facebook's parent, and then Tesla. But those companies are so much bigger than Carvana. Carvana came in third, but when you look at how small Carvana is relative to those giants, it tells you that this really jumped out as a company that's having problems. The stock is down 97% this year. There is a lot of talk about possible bankruptcy filing. I don't think in coming weeks, but they have been running short of cash. The market value is down almost as much as the stock, and investors just lost a ton of money in Carvana this year. So,
Rick,
worst company of the year.
Imagine if you're on the management team at Carvana, you wake up today and you're voted the most worst company of the year. But you reached out to them. Did they get back to you? I mean, they're under a lot of fire. All of them.
Yeah, they did. They said, they didn't deny the problems that are apparent to everybody. I mean, it's a public company. They said, look, a lot of innovative companies trying to disrupt established industries struggle, and they go on to become market leaders, and we intend to become one of those market leaders. So maybe they will be the next Amazon, or maybe they will be the next Toys.com. Who knows?
Well, it's also amid a rapid shift in the purchase cycle for used cars, and the pricing for that has certainly impacted Carvana and their ability to move through some of the inventory that they have.
So, I mean, let's talk about the company a little bit. You've used it, Saz. We've talked about
great
Carvana.
Experiences.
It's actually a clever and probably a workable business model. It gets people out of used car dealerships. I mean, almost nobody really enjoys going to a used car dealer.
Hate it.
They have done a pretty interesting job of gathering up all this inventory from around the country that they can ship around the country, so you're not just stuck with what might be available at the corner lot. They had two problems. One is this has been a growth stock from the moment it went public in 2017. And they continued spending when the market started to turn. And analysts say they should have seen, everybody knew interest rates were going to go up. Everybody knew that was going to have an impact on interest rate sensitive industries such as car buying and housing. More than 50% of people finance used car purchase. So for sure that was going to hit sales, and they just kept spending. And then they made an acquisition of an auction firm called Odessa. That deal went through in May. And it's strategically smart, but the timing was wrong. So they took on a lot of debt to finance that, just as sales were starting to decline, unit sales were starting to decline, revenue was starting to decline, and they just have a cash crunch. So the stock is in the single digits now. I mean, this was a high flyer for a couple of years, and it's now in the single digits with people wondering, are they going to get through? They're going to need new financing from somewhere in 2023. The question is where.
And isn't there also something about the structure of the company? It's family controlled, is it not?
Yep, it's Eddie Garcia III runs the company. He and his father, Eddie Garcia II, I guess. Eddie Garcia II sort of had the original company that turned into Carvana. And they can control the company. Even though it's public, they control what happens. It's one of those founder-started companies where the founders have a lot of management control. And Eddie Garcia III he's just got a reputation as a guy who moves fast. I guess you could say he moves fast and breaks things, doesn't worry about it that much. He has been focused on growing this company to become the dominant used car purveyor. And there's a lot of room to do that. I mean, the biggest competitor is CarMax. CarMax's market share is only like 3.5%. Wow. So there is a lot of room for somebody to come in. And I think the Carvana story has been, if we could get CarMax's market share and bump that up to, let's say, all we need is like 5% market share, then the finances start to work out. They just haven't gotten to 5% yet, and now they're having a funding crunch. So I hope the company makes it. Because this is an industry that needs somebody finding a clever way to better serve customers. So let's keep in mind if they do declare Chapter 11 in 2023, that doesn't mean the company goes away. It means it possibly restructures, shareholders get wiped out, but that it could be the thing that gets them back on their feet. But of course, they don't want to do that.
Rick, your story on the homepage now brings up a good point on the cost of running this business, and I'll use me as an example. I think before they shipped me my car that I got off of there, they put on 4 new tires. They changed 2 brake pads, and then when the car arrived, the rims were all messed up. I called them. They sent me a check to get them refurbished. So all in, I mean, that was almost, let's say, $4,000 in extra costs just to get me that car and keep me as a potential future customer.
So remember we just talked about too much spending like it's a growth company. I mean, that is, from a customer perspective, that is definitely the right thing to do, because that tells the customer this is not just another used car dealer, right? But they have never turned a profit, an annual profit. I think they've only been profitable 1 quarter. And you can point to other companies that went that way. I mean, Tesla, I think it took Tesla 15 years to turn an annual profit. But Tesla did not have the kind of funding crunch along the way that Carvana has now. So they need money.
All right, we're going to continue to watch shares of Carvana, but the worst company of the year as voted by our viewers.
And it could be a rebound story next year. Who knows? It could be the rebound of 2023.
We're calling the bottom.
Could be. Yeah, we're calling the bottom. Let's hope.
Rick Newman, thanks so much for
guys.
breaking this down for us.